Kaaren, welcome to the show today.
Hey, Michael, thank you so much.
Yeah, we're going to dissect self-directed IRA and retirement fund dissecting here today. Just give us a little background. We're going to start kind of basic and general, but people may not know that you can invest with IRAs and possibly 401ks. And we'll kind of start at the top, but then we're going to go into different types of self-directed investing. So really excited about that. First of all, tell us a little bit about you and your company, uDirect.
Yeah, we just hit our 16th anniversary, so we've been
Nice.
helping people self-direct. We have over $1 billion under management. We have thousands and thousands of account holders. So basically, this all stemmed from, for me anyway, from a background of real estate, property management, loan servicing, loan origination, all throughout my career. And then it culminated really in 2007. I went to work for a self-directed IRA company, and a couple years later spun off into uDirect.
Nice. Okay, so you have some real estate investment background, which is amazing. So let's give us a kind of an intro into self-directed investing. What does that even mean?
Well, what it means is that you can take an IRA, and believe me, an IRA is it's one thing. It's not complicated. We all know it's an individual retirement arrangement or individual retirement account, and it doesn't have to be used for for these kinds of just general stock market based assets. It can be used for alternative assets like cryptocurrency. It could be precious metals or notes. Your IRA could be the bank and lend money. There are so many things a self-directed account can do because the self-directed account invests in what we call alternative assets, which is alternative to the stock market.
Yeah, that's pretty cool because a lot of people didn't know that. I mean, they do because you have an IRA custodian, your administrator, or company, or 401k, and then you're asked to allocate funds in various different funds and mutual funds. And the fact that you can buy a house with it, or make a loan with it, or buy cryptocurrency is completely foreign, and that's pretty wild. So how does that work? I mean, like, all right, so I have an IRA and it's invested in something or another, and like, okay, I want to do this. Like, what are the steps to actually take my IRA so I can invest in real estate or buy crypto or whatever is these alternative investments? Like, what needs to happen?
Yeah. It's not that difficult. I mean, what you do first off, you want to liquidate what you have to cash because you would be moving cash over. The purpose of having a self-directed IRA is you've got some alternative asset in mind, and you're going to need cash to invest with that. So you would liquidate the assets that you have, transfer cash over. It's very simple. You fill out a form. We, help you move the money. So I say it's a three-step process. Open the account, fund it by transferring the money over, and then invest. And so then you've self-directed. It's not tough.
So it's pretty easy. And so let's talk about what kind of investing, what that looks like. So let's talk about real estate in general. So I want to buy a rental property. What does that entail?
Well, rental property is great in a self-directed IRA. We had a little kind of like a party on rental property right after the Great Recession, as you'll recall. But people are still buying rental properties in their IRA regardless of the price. So what it is it's just like acquiring any other real estate. You go through choose the property, make the offer, you negotiate closing costs, the whole bit. But when it comes to funding the deal, that money comes from your self-directed account. Now, I say that, and I need to add that it's possible for an IRA to get a loan. It's not the individual borrowing money, it's the IRA account itself that borrows the money. It's a special loan called a non-recourse loan. So I could, go deep on that, but it's possible for an IRA to borrow money to buy a house. But then what happens is you close, your tenants move in, the rent checks are payable, not to you personally, but to the IRA. So those rent checks are tax-free and a Roth or tax deferred. So you're building your retirement. You're prepping for later.
All right, so there's something when you're investing, you have to has to be some kind of arm's length transaction because you're talking about so I can't buy this thing in the IRA, I can't in the IRA's name, and then pocket the rent checks, right? So what are some of the guidelines around what does that mean, arm's length transaction?
Well, I mean, as a whole, as a bucket, these are called prohibited transactions. And if you're a rule book kind of person, you can read about it in the Internal Revenue Code. Doesn't that sound exciting?
Yeah,
I
very
think I'm
much
going to
so.
go read the Internal Revenue Code. But it's if you want to, go ahead. It's 4975. That's where it's written. So they say there are things that you can't do. Disallowed people can't do certain things. You're disallowed to your IRA. Plus any ascendant or descendant, you and your spouse are disallowed. Also a 50-50 business partner and anybody who's a fiduciary in the deal, they're disallowed people. So those people have to stay arm's length. So what that means is your IRA doesn't buy a house from your parents. If your IRA were to buy a house, so your niece or nephew could live there, but not your children. Your IRA can make a loan to, say, your uncle to start a business, but your IRA can't make that loan to your dad. So brothers and sisters are okay. They are allowed, but not up and down the family tree. Think of it as like if you died without a will, who would inherit your estate? Those are the people.
I see. So the IRA then in this case owns the house, and the rent checks would have to be deposited in the account. But also, if I have expenses like say real estate taxes or insurance, how do I pay for those?
Well, yeah, they must be paid by IRA funds. And if if say you don't have the money to come up with that, maybe you need a new roof on the house your IRA owns. So what you could do is like liquidate other assets in the plan. You could transfer other money from another retirement account. You could make a contribution or even take a loan, like maybe borrow from somebody else as a non-recourse loan to your plan.
So that's if I'm buying a rental property and it's titled in the IRA account and
Right.
funds move in and out of it. Now, what about an LP investment like a syndication? What if I want to use my IRA for that? How does that similar or different?
Yeah, that is like the number one most popular way to use a self-directed IRA is as an LP or in a syndication, number one asset class. So it's of course you need to do your due diligence no matter what you're investing in. That is the challenge. That's a challenge, is due diligence and making sure you're making a good investment. Okay. But basically it's the same thing. You open the account, put the money in there. After you reviewed and chosen that asset, you give us what we call the supporting documentation. That's the contract. Could be like the subscription agreement. We're going to review that. And assuming we're taking a look at it, not to say if it's a good or bad investment, because it's self-directed and the account holder is making that decision, but we're going to look at it to make sure that it's vested correctly and so forth. Then we'll go ahead and fund that deal. And then all proceeds come back in the IRA. That's how that works.
Okay, gotcha. All right, interesting. So the idea of investing with your IRA is that presumably any kind of capital gains would grow tax-free?
Yes. And there wouldn't be, capital gains. It's not going to be taxed capital gains, right? It'll be taxed as regular income as you take it out later on in life, preferably in retirement.
And can you do the same thing with a Roth, for example? Or is there a difference between
Yeah.
traditional IRA and Roth?
Yeah, there's a huge difference. The Roth IRA it can be tax-free as long as you are, you meet two criteria. You're 59 and a half and you've had a Roth account for at least 5 years. Then all those proceeds come out tax-free. But if you want to go deep on the Roth, there's a lot to say about that. There's a lot here to go deep on. But yes, a Roth is a great account because when you're in retirement, you're going to probably have really low income and really low tax, one would hope. But at the same time, why pay tax if you don't have to? Why not keep as much as you can and not pay tax in retirement? So a Roth is a great tool.
Anything you can say about when one is better than the other? I mean, you're probably not a tax advisor, but do you have,
Right,
maybe
yeah.
just keep it kind of high level of considerations between one and the other?
Sure. Well, I think what I'd like to say about the Roth account is that there is a Roth IRA. Okay, there's that where the money comes in, you've already paid tax on it, and it can grow tax free. All right, there's that. Now, at the end of 2022, the Secure Act 2.0 was passed. Okay, and that Secure 2.0 Act lets us make Roth type contributions to a SEP IRA or a simple IRA. You know, so the SEP contribution amount is a lesser of 25% of your income up to a cap of 70K. So it is possible if you make enough money that if you have a SEP IRA, which is a simplified employee pension, it means you're self-employed, you could make a Roth contribution up to $70,000 in a SEP IRA. It's just great. Now you may have also, so people love the Roth, right? Tax-free. Another way to get into Roth dollars is what sometimes is called the backdoor IRA, the backdoor Roth, where you contribute to a pre-tax account and at some point in time do a conversion. So you're converting from pre-tax to Roth. Now, when you do that, you definitely want to be working with your tax advisor, so that because they're going to need to calculate that tax hit that you're going to take, because every dollar that you convert is going to be taxable to you. So you want to do that as a strategy. A lot of times people will do that if they know they're going to be taking a big loss one year or have a really low tax year. That may be the year they do the Roth conversion because the tax may be the lowest right then.
I gotcha. Now there's a thing called a UBIT tax. What is that, and how does that factor into all this?
Everyone asks, tell me about UBIT and UDFI. Okay, so they're like twin taxes. So you could read about it on the IRS's website, which is irs.gov, publication 598. Okay, that's where you can read about it. When you're an investor, you've got to have a good tax person. So discuss this with your tax person. Now, what your IRA will do is file a 990T. So when you and I, when we pay our tax, we file a 1040. When an IRA pays its tax, it files a 990T. Now, also, like for example, I sit on the board for a charity. The charity files a 990T. So it's like a tax exempt entity will file one of these things. So the tax will be calculated in this way. And again, talk to your tax advisor. But say, for example, your IRA buys a house and uses non-recourse money to buy that property. Well, say, for example, 70% of the money coming from the IRA, 30% coming from debt. Then here comes a rent check. Well, 30% of that rent check that just went in your IRA came from borrowed money, came from debt. The other 70% came because you saved. So it's only that 30% of proceeds that your IRA received because of debt that's subject to that tax. So that's good to know. Also, there could be deductions. So your tax person could take deductions. Now, this also happens not just if your IRA takes a loan, but say, for example, going back to the LP, going back to the syndication, if that syndicator in their capital stack has leverage, and they usually do, right? So if there's leverage in that capital stack, that can throw off this tax to the IRA investor. It doesn't have to be the end of the world. Maybe they did a cost seg and can pass some of that on to you. You may actually owe no tax at all, but you just definitely need to know about it. Begin with the end in mind. Remember Stephen Covey, 7 Habits, that's what he used to say. So know that could happen ahead of time and be prepared for it.
Yeah, either way, when you're in real estate, you got to work with a CPA that knows real estate. It happens all the time. Oh, my CPA says you can't do that or whatever. And it's simply because the CPA is not familiar with real estate. And this is an area where it's really beneficial. Now, is there a way around this UBIT thing, especially if you're investing in real estate?
No.
What about, okay.
What are you thinking?
Well, I'm thinking like maybe the solo 401k. Like, I don't know, but it's a totally different vehicle. So you have the SEP, the traditional, then you got your Roth. So talk to me a little about the solo, because it's similar, but it's not the same thing. And I'm wondering if in people's minds that could be an alternative or maybe not.
Well, okay. So first off, I want to say that UBIT is unrelated business income tax. And UDFI is unrelated debt financed income tax. So you see, these are two different kinds of tax. They're like twin taxes though, because the rate's the same. It's the same rate as the trust rate. It's between like 17 to 37%. Okay. So that said, when if say you don't have an IRA, say you have a solo 401k and you still may owe UBIT or UDFI, typically UDFI can be exempt in the cases of like acquisition, if it's acquisition money. That's typically, to my knowledge, when UDFI doesn't apply for a solo K, but that's not all the time. That's for acquisition. So definitely check with your tax professional.
Yeah. So there's again, I think the bottom line is check with your tax professional, but it's yet another example where real estate has advantages tax-wise, whether it's investing with the IRA or solo 401k or 1031 exchange or bonus depreciation. It's just amazing.
Yeah.
But you got to work with an expert. Otherwise, it'll all be lost. Now,
well, I mean, I don't know about you, but like for me, my tax person is just like right with me because I'm doing all of these different investing things. And I want them first off to know what I'm doing so that I'm getting the proper tax credit anyway. So even if I don't have massive questions, I'm always keeping them involved in what I'm doing. Just, I can upload some information so that they've got that in their files about what I'm doing. You always want your tax person to know what you've got going on, investing wise.
Especially real estate, because yes, real estate is great for cash flow and appreciation, but really the third benefit, which you don't really get anywhere else, is taxes. So if you don't have a good tax person, then you're going to lose that third benefit, which is in cases substantial. Now, talk to me about, there's some recent legislation that was passed around 401k and alternative assets investing. What is that all about?
Yeah, in the self-directed industry, we consider this to be really good news. Trump came out and said 401ks are going to be able to invest in alternative assets. So we hear this as an industry and think, whoa, what is this? So this is what it will probably look like. Now, this thing passed, but the Department of Labor is going to take a 180-day, 6-month look at this. So what this is where you work. If you have a 401k, 403b, 457 plan, the plan can invest in these, kind of like funds of alternative assets. So typically when you invest in syndications, you have to be an accredited investor, right? So in this case, it's the plan that is the alternative, or sorry, that's the accredited investor. The plan is the accredited investor investing in this fund of alternative assets. And then you, as the employee, you're going to invest in the fund. So you don't have to be accredited to invest in alternative assets through this plan. But the reason the Department of Labor is taking a look at it is because when you are an employer, you have an employer plan, you have a fiduciary duty to your employees as far as risk is concerned. So the DOL is taking a look at these risk factors, possibly indemnifying employers to go ahead and invest in these things. But it is so great for the self-directed space, because a lot of times the regulators call these difficult to value assets, and they want to make it seem like they're so weird. Like, what's weird about a house? What's weird about a building? Why is this alternative? I mean, you and I were sitting in a building right now, and it's the most, common thing to mankind, but they're considered alternative. So it brings alternative assets back into the mainstream, which is really what they are.
Well, that's exactly right. I mean, I guess they're supposed to make it safe, so you can't screw it up. I guess if you buy a rental, you could potentially screw it up, but of course that is not possible when you invest in the stock market. Obviously,
no, you could never mess. No, yeah.
So that's pretty cool, though. I'd love to see how the mechanics of that work, right? Because that the custodian, the administrator, would have to then sign legal docs. You can't just click on something. It'll be interesting to see how that works out. Because right now you can't buy a house in your 401k, right? You have to quit your job and then roll it over into IRA, and then you can self-direct it, something like that.
Yeah. And after this is fully enacted, that will still be the case. You're still not buying a house with your 401k, but there will be a fund of alternative assets, a packaged group of alternative assets. So again, it's the plan, like say it's like, I don't know, like John Hancock, they're the investor. They're the accredited investor, but your IRA is just buying a little bit of that fund.
So it's a little bit more like buying a REIT, maybe?
Yeah, it is. Yeah, gotcha. A lot like that.
Okay, gotcha. All right, so it's not quite like the self-directed IRA where you're actually taking title to something out of your 401k. It won't be like that.
Correct.
Okay.
100%. Yeah.
Well, that's pretty amazing. That's pretty cool. Yeah. So this has been amazing, Kaaren. How can people find out more about you and what you got going on in uDirect?
Yeah, we're all over social media. Hit us up on Instagram or LinkedIn or, Facebook, all that. But our website is the letter U, uDirectIRA.com. And we have a free report if you're interested in like what kind of assets can my IRA invest in. We have a free report right on our website, so you can check it out there.
So check it out at uDirect as well. Kaaren, thanks so much.
Oh,
yeah, go ahead.
I should add, if I may, if you don't mind. Sure. I published a book. Kaboom.
Yes, that's right. On BiggerPockets Publishing, I think. That's right.
That's right. So I'm so excited this year, the BiggerPockets Guide to Self-Directed IRA Investing. So check this out on Amazon. And so it gives you A to Z. It's a real good guidebook. It's not a storybook. It's a guidebook and a resource on how to self-direct.
Yeah, it's very important that if you're obviously a passive investor, you understand this, but also if you're an active investor. I remember a story, Kaaren, this was a long time ago. I was first got into business, and I was meeting with a neighbor, and I got him to go to lunch. And the minimum investment was $50,000. And he was like, yeah, I don't have that kind of money. I'm like, daggone it. I just wasted an hour of my life talking about this thing. I said, well, do you have an IRA? He goes, yeah, I got like $500,000 in there. And I'm like, and I'm such an idiot, right? I'm like, I didn't even ask, because there's so many people have money in IRAs and they don't really have it in liquid, but they've been saving into their 401k and IRA for so long. So it's very important that you all become very familiar with this self-directing thing, and maybe even buy a copy of Karen's book and then hand it out to your investors and educate them about that.
And to your point, man, there is $40 trillion in American retirement.
So much.
40 trillion. It's a big pool of money that you
Yep.
could be tapping
There's a
into.
lot of, and again, 99.9% of people do not know they can invest in real estate with their IRA. So the opportunity is absolutely huge. So good reminder, check out Karen's book. So it was great hanging out with you, Kaaren.
Thank you, Michael.